holding land is kind of a good hedge for inflation in a way.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it.
Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Pete Reese. Pete, how are you doing today?
I'm doing great. Great. Thanks for having me, Todd.
Yeah, absolutely. A little bit about Pete. He is licensed real estate broker in California, but an active investor since 2000 and really no longer represents the buyers, the sellers in their purchases. They're focused on operating the real estate investment business. And, but you've done everything, a lot of things in real estate. You've developed luxury properties, you've listed luxury properties, you've listed REOs and short sales. You've worked with investors, you've been a part of thousands of real estate transactions. So just a wealth of knowledge. So I guess with that, Pete, why don't you just give our listeners a bit more about your background and then what you guys are focused on today?
Sure. Well, I've been involved, like you said, in real estate for quite some time, since I guess you could say the year 2000, when my wife and we bought our first home. And we bought it with FHA financing, 3.5% down. And at the time, it was about $200,000 here in California, which was, way less than things are right now.
Yeah.
So we bought it and held it for about 2 years and sold it and put about $50,000 in our pocket. And we thought we were real estate moguls,
What's a $200,000 house sell for today? What would that house sell for right now?
That same house is probably $500,000.
500. Okay.
Right. Yeah. So I guess it's, I don't know. There's just not much. If you're looking for a $200,000 house in San Diego County, it's you're not going to be. Yeah, I don't even know if there are any at this point.
Right.
But it was an entry level house, and it kind of got the bug going for us. We bought another house that was the kind of a fixer, fixed it up, did well on that. Started flipping homes. So we did that kind of as our primary business for quite some time, a number of years. Got my real estate broker's license to try to, have a little bit more control of the deals I was finding and show the properties to myself and that type of thing. But it came in handy when the real estate market crashed because we decided that probably flipping homes at that point in time was probably not the best the best thing to do.
Yeah,
but my wife got
the values are crashing and you're trying
everything's crashing. It just we had we had never seen anything like that. We did not anticipate anything like that. So we kind of shifted gears and she said, "Hey, I think you'd be really good at selling bank-owned properties," that's what was selling. There was still a ton of activity. So I got heavily involved in that, started listing them for all the banks. And that was a big learning experience and really good thing to have income coming in at that time. And a lot of people in real estate were really struggling at the time. So
what's that business like that's selling these bank-owned REOs and short sales? What like, is it difficult to do, or what were the like maybe 2 or 3 positives and 2 or 3 negatives of that?
Right. Yeah. Good questions. If I had to do it, if I had to do it now, I wouldn't want to go back into that business for sure. So I guess the positives were that we were selling things and we were getting commissions at a time when the whole market was really having some issues.
Yeah.
So that was a really good aspect to it because all the other agents were envious because I was doing a lot of deals.
Yeah. You're making money when they're not.
Right, exactly. So it's a tough thing, and a lot of people were trying to break into it. The other thing about it is to kind of break into that business, you've got to do a lot of what they call BPOs, broker price opinions, which are mini appraisals. So we kind of paid our dues doing a bunch of those BPOs, and then got our work noticed by a lot of these bank asset managers. Gradually started getting some listings, doing some good job for them, and then they start feeding you more and more listings. So it was a good business in that way. A couple of the downsides that were really tough were the people aspect of it. I mean, first thing that happens when you get a listing, you get an email that says property assignment 123 Main Street. And your first job is to go down there and see if it's occupied. So you have to go down to the house as the representative of the bank.
Yep.
And knock on the door, see if there are people still living there. And I've had, all kinds of, sad situations. It was just a bad time financially for many people.
Yeah.
And some people were not even aware that their property had sold at the foreclosure auction. They were
really?
getting these notices and things. And at the time, many of these foreclosure sales were getting delayed. The banks were really trying to work with people, but then sometimes they just didn't delay them, and it went through the auction, and people were they didn't know. So I'm this representative of the bank, kind of letting them know what's going on. And it's just a sad thing. And the emotional part of it, is tough.
Yeah,
I'm more of the
that's tough.
business side of things. I like the business side of things, but when the emotions come involved, it's not for me.
Yeah, I mean, you got to tell somebody that they no longer can live at their house, and
Yeah,
you probably got sworn at a couple times, maybe threatened a few times.
I tried to take the approach that I was, trying to work with. They were shocked sometimes.
Yeah,
but I tried to work with them as best as I could. I mean, I was always authorized to do a cash for keys arrangement. Sure. So I would try to get them as much as I could and get them as much time as I could. So to try to be on their side of the table a little bit while still accomplishing the goals of the bank. But the situations where the kids answer the door and I'm like, hey, can I speak to your parent? It's just heartbreaking,
That's sad. All right, let's move on then to kind of what you're focused on right now.
Yeah, right now, for the last 2 years, we've been heavily involved in our main business. 100% of our business is land flipping and development. And this is short-term holds of land, which I know a lot of people may not think go together. Land, traditionally it takes a while to sell. But in this model, basically what we're doing is we're buying properties off market, rural land mostly that is maybe neglected or underused, and then we're buying it for an aggressive price that will allow us to do some basic things to the property generally, and then relist it at and also a pretty aggressive price so we could sell it quickly.
So are you guys changing the use of the land, or is that part of like the strategy, or is it just the strategy of?
Yeah, I haven't changed the use yet on any of these properties, but we'll do some minor things generally, like some clearing of paths. We'll do a survey. We'll do perk tests. Sometimes we'll do a minor subdivision where we just get a survey and take like a 100-acre parcel and break it up into 5 20-acre parcels and then resell each parcel individually. We do that. And generally, we're just doing some minor things and then putting it on the market again.
Okay. And is it like what's your typical piece of property? Is it a is somebody using it for recreation, hunting or whatever? Is somebody using it for farming? Is it somebody that wants to put a house on it, a cabin on it? What's the typical use?
Can be all of those. I mean, we try to buy properties where there could be a number of options for potential uses for the end buyer. A lot easier to sell in that way. But most of these properties are sort of within an hour or two of sort of major metropolitan areas that have some things going for them. So those are kind of the areas that we target. And we're looking for, at this point, we're looking for properties that are at least 10 acres, all the way up to the biggest one we've done was 650 acres. I would even do bigger if we found some good properties that way. And then, the end buyer could be, someone that is looking to do a home site on there, or it could be someone that's just looking for a recreational property. We have purchased and sold some farmland as well. Those are a little tougher to get a hold of, but those are really popular properties as well.
Yeah, I would imagine. How are you flipping a piece of land? Because it's not like it's not like it's got a big value add. Well, maybe I'm wrong, but I wouldn't think you could have land that has that big of a value add. A little bit of cleanup, maybe put a road in there, a driveway in there, or something like that. But how are you flipping?
Yeah, typically minor stuff. I mean, we're buying at the right prices, and it's all because we're buying them off market. We're, marketing directly to the property owners. And a lot of these people, they inherited the property. They've never even been to the property. or they've owned it for many years and they're just sick of paying the property taxes every year, and it's more of a hassle for them. And they don't really want to go through the traditional sales process to market it to a, you know, a retail end buyer. So we step in for the people that it does make sense. We offer them a quick cash deal, and if they're interested, we do a deal with them and go from there. So
are there certain things you look for in a piece of property, or let me rephrase that. Are there certain things that you avoid with a piece of property?
Yes, definitely. And in fact, like many of these properties, we generate all our business with direct mail. So we send out an actual offer letter to a list that we compile. And it's like, Mr. Smith, we've interested in buying your 10-acre parcel, and here's the price that we can offer you. And then we'll get the calls back, we'll either get calls back or emails back, text, everything. And then we'll evaluate the property and see. And a lot of times those properties that come back are really not something that we want to move forward with. Now, some of these reasons that we don't want to move forward with them are issues that we know we're going to have a problem with on the resale side of things. Like it could have wetlands on the property. That's not like a done deal in every case, but if the entire property is wetlands, it's really not something we want. Yeah, swamps, exactly. Yeah. Or if it's like the topography is terrible, like it's on the side of a mountain. Yeah. Or if it's, believe it or not, there's a lot of properties out there that are landlocked. So they have no road frontage and they have no legal or deeded access. So they're just kind of,
you got to take your helicopter into it.
Island, and you can pick up those properties pretty cheap, but they're not buildable. Yeah. And in a lot of states, you do have the legal right to go access your properties, but you can't build on them ever. And you could just maybe go ride four-wheelers and do recreational things on them.
Yeah.
Limited use,
Yeah. Yeah. So is that a property you would avoid even if you could get it at the right price? You just say, forget it. We're not going to deal with this.
I bought one landlocked property and I thought it was a screaming deal. It was like 12 acres for $3,000. And it got so much interest when I put it on the market to sell, but no one really understood what landlocked means. So we had to explain it over and over again and fell out of contract a couple of times. And, when it all was said and done, we made a little bit of money, but it wasn't worth all the hassle.
There's a lot of hassle. Yeah.
Yeah. For not making much money. So,
yeah. What do you, I guess anything else that you guys, red flags or things you guys avoid before I move on?
Those are the main things. I mean, some things come up we purchase everything through a title company, an attorney, or escrow company.
Are you doing environmentals on everything too?
No environmental stuff, but so we do call the city or the county and go through a whole list of questions. We try to determine if it's buildable. Those are, because at least that gives, if it's buildable, there's another possible exit for us in that, a buyer would purchase it for, a home site potentially. Yeah. There's always the potential for someone to use it as a recreational property, but if it's also buildable, then it's, we're normally able to sell it for a little more, and we have a bigger buyer pool, I guess you could say. So, we go through a list of questions and a bunch of due diligence stuff while we're under contract. We also have local brokers that we work with where we get their opinion on the property as well. And, so if there's any big red flags that come up, all kinds of weird stuff can come up, but we try to figure that stuff out while we're under contract before we actually send the money.
What's the weirdest thing that has came up?
We actually run into this quite a bit, but I don't like it. Like sometimes like a cemetery, like an old family cemetery or something is on the property.
Yeah.
I try to avoid those properties because I don't know. I just don't want to deal with that.
Yeah. I don't want to deal with a bunch of dead bodies.
No. Yeah. Like who knows? Yeah.
Interesting. And so as you're looking, do you guys have a specific, there's so much property out there. There's so much land out there. Like, how do you maneuver through that? When you said 10 to 650 plus acres, I mean, that's a lot of properties.
Right.
So how do you target these people? Otherwise, it sounds like you'd be sending out like hundreds of thousands of, letters to people.
Right. Well, first of all, the first thing we do is we identify certain regions that we like.
Yeah.
And we just look at kind of like most
So
investors would
are you looking for like population growth and that type of stuff? Or are you looking for vacation area? Like what's your kind of your big target then? If I'm looking at a certain region or a certain area, what's your main thing?
The main thing is sales activity.
Sales
So
activity.
if I can look and see, hey, there's good sales activity here. Normally I look at the number of, I'll do, as a basic example, I may take a particular county in, say, Maryland, and I'll look for comps, and I'll say, lots that are 10 acres to 100 acres. And I'll see over the past 12 months, how many sold, and then how many are listed in that category right now. So by just those couple metrics there, I can see what kind of activity there is. So for instance, if I look that up and it says there's been 10 sales in the past year, and then I see on there that there's 40 listings, that's potentially 4 years worth of inventory that's just there. The good ones are the ones where it's even or better than even.
Mm-hmm.
So I first look for sales activity. Is it an active market? Are things selling? Is there demand for properties there? Once we figure that out, then we start pulling our lists. I use a company called Data Tree. It's a First American company. And by there, we can kind of really do all kinds of filters for the land. I mean, our main things that we look for, property size. We're looking at assessed value in a lot of these counties, because if it's got like a super low assessed value, that's kind of a filter for us that maybe it's got some issues. It's not buildable. It's landlocked, something like that. Sometimes there's no correlation.
So you're going to avoid marketing to specific assessed value.
Yeah, like we'll normally cut it off. Like if the assessed value is below, $20,000 or something like that, we'll just completely lop that off the list.
Forget it. Yeah.
But you got to be careful with that too, because some counties there's not really a big correlation between market value and assessed value. Now, some counties are really on top of it. Some counties are not. They just kind of used an assessed value based off of the previous purchase price, or
if it's sold
30
years ago.
Yeah, exactly. So you got to be careful so you get an idea of which counties are on top of it and which ones aren't. So we try to target those areas that we know we've got a good chance of being able to resell a property quickly. That's our whole thing. Our average hold time on these properties, like the amount of time that we actually have in our inventory, is 60 days.
Are you buying on terms at all? Are you buying a contract for deed or anything like that from the sellers, and are you selling on terms at all?
Good questions. We actually, at this point, we are only buying with cash. Now, I have done 2 different properties. That one property I mentioned, 656 acres, and there was another one as well where I purchased it with a partner. And in those situations, there are, in the land business, the land flipping business, there are partners that will work with you. If you've got a really good deal, they'll bring the money to the table, and then you split the profits with them. So you're kind of like the marketing partner, they're the money partner, and you both walk away with a healthy profit at the end of the deal. So in that particular example, the 650, some acre property, we bought it for $315,000, which is a really good deal. That's like, $500 an acre. And it's a beautiful property too. And bought it for $315,000. So in this case, the partner that I worked with, he brought all the money to the deal. We ended up selling it for $595,000. So not quite a double, but a good profit return. And we had to pay commissions and closing costs. but when all was said and done, we each walked away with 108,000 or something like that. And so it was a win for him, win for me, and all the way around. And I didn't have to wire 315,000 myself, so I would have made double the profit. But that's a big chunk of change, just for to commit to one deal.
Well, yeah, commit to one deal, right? And if you don't have the
Right.
money, or if it's going to make the money really tight and you can't do any more deals, well, that
That's
doesn't
right.
work. So bringing on money can make a lot of sense. I mean, I'm a syndicator. I syndicate multifamily. I could certainly make a lot of money, a lot more money if I didn't bring on any investors per deal. But I would be doing a whole heap of a lot less deals, plus smaller deals, if I didn't bring on investors. So, you got to do what you got to do to get these deals across the table. And hard to pass on a 650 acre property that you can nearly double your money on because you don't have the money. We'll find a partner, and get it done like you did.
Yep.
So yeah, that makes way more sense. Do you ever sell it on a contract for deed or anything like that?
I don't. There's a lot of land investors. There's a lot of different business models kind of within this land flipping business. Some of the investors, they'll buy the properties, and a lot of these will buy them super cheap and then sell them on terms. They'll try to get the down payment to cover what they bought the property for, and then, take payments for 5 years or something like that. I don't do that. I actually recently started working with another person. He basically, what he'll do is he'll buy the note from me at closing, so I can offer it in our marketing that we own owner finance, and then he'll pay me he'll cash me out at closing, so I get the cash, and then the buyer gets to pay for it on terms.
So he's going to give you basically, or you're going to give him a little bit of a discount.
Yeah. Basically, he gets a 20% discount.
Yeah.
So
you get the cash, then he'll finance it. He'll get the cash flow.
Right. Exactly. And the buyer, puts a certain percentage down. So it's kind of a defined program. The buyer puts 20% down. So it's pretty low risk for the note holder as well, because it's a good piece of property. And if he got it back, then he would be able to sell for more anyhow. So
have you thought about doing that yourself, or you just like, I just don't want to deal with that? Or
I have thought about that myself, but if I did do that myself, I would probably start up a fund of some sort and pool money from other investors, so I don't have to use all my own cash. So
yeah, well, there might be people listening like, hey, Pete, look, if you do that fund, we want to get with this thing, because land. The nice thing about land, I mean, there's risk. Your risk is on the buy mainly, and as the economy shifts and changes, certainly land can lose value, but especially if you're buying it right, you're probably doing okay, and there's very little other risk, right?
Yeah. I mean, at this point, we're only buying properties that I know are quality. Like, we probably 90% of the leads that come in, we don't move forward with because they're not a quality property. I know if I buy a quality property and I pick it up for the right price.
Define quality then for our listeners. Define what you would call quality.
Yeah, for me, it has to kind of fit a number of different categories. First of all, I love properties with road frontage. If it has deeded access of some sort, that's fine too. But if it's got a good amount of road frontage, that's always more desirable than some other odd access situation.
Road frontage probably with ingress egress, right? So you can actually
exactly,
not your freeway.
Yeah, exactly. Like, sometimes we'll have these properties that come up, they're right along the freeway, and it looks like, it looks like on the satellite images that the access is there, but obviously when you get on the ground, you're like, this is a freeway. There's no way the Department of Transportation is going to let us put a driveway.
Can't put a driveway here.
Yeah. So, definitely the access is a big thing. Also the topography. Like, I love, the more gentle the property, the better. They always sell a lot better. If they have nice trees on the property, if they've got kind of check all the boxes as far as buildability goes. If we know that the soils are good there, that it'll support a septic system. If there's some other factors like that kind of make it like, okay, I'm nearly 100% certain that you could build on this property. that helps. And also the area itself. Like if we know that there's demand in that area, then, if we know that if we put it on the market for the right price, it's going to sell. Plus, it's kind of a weird time as well for this, the market as a whole is kind of in certain areas, it's struggling. The areas that have some tailwind behind them are doing fine and certainly holding up right now. I think the other thing that will benefit from in the land business is just the kind of inflationary environment. So I think that it's kind of a holding land is kind of a good hedge for inflation in a way.
Yeah, agreed. What about a seller that wants to keep like the timber rights? What do you do with that?
We don't mess around with that. We'll only buy the property if we get all of that. I have had a situation where a couple of the properties we bought, the previous owner, maybe somewhere in the chain of title, had sold off their below surface like gas rights and things like that
or whatever.
Yeah, I've got one property that's got a gas well on it, and now we get a check. We're going to be getting a check every month from that, but it limits the use for the end buyer as well. So it's something you have to balance.
Yeah, maybe not quite as attractive if depending on your use, right? If I'm going to be hunting there, I certainly don't want somebody that's got timber rights on it, because all of a sudden a beautiful piece of hunting property is, a field with a couple sticks sticking up.
I know.
I was actually looking for some land, for rec land for myself and family, and a couple of the pieces of property. The owners wanted to keep the timber rights, and I'm like, that's not going to work for me. Like, there's no way you're just not going to cut down my trees. Like, sorry.
The trees are an asset. I was talking with my daughter today. I was like, what would be really cool is if I would be able to advertise these properties, and I would be able to say, okay, this property has 652 poplar trees and 321 pine. Like, I wonder if there's some technology to do that with with all these satellite images. I'm sure someone's got it figured out way smarter than me.
Somebody's probably got it figured out. That'd be kind of cool to be able to know that, and be able, there's a lot of tree people out there that'd be like, oh, this is amazing.
Yeah, I love trees too. I'm with you on that. Like, if a property is clear cut, when we bought clear cut properties, they're so hard to sell. People don't want them. People want the nice trees and the nice setting.
Yep. What else? Any other like nuances, things you really look for, things you do to, you're doing to be successful?
Yeah, just really honing in on the system and trying to improve it. I've built a whole team around me now at this point, that everything from getting the leads input into the system. I've got an acquisition manager that talks to all the property owners, as the leads come in. I've got another team member that analyzes all these properties and pretty much, serves it up to me so I can kind of make the final decision on them. But I'm not doing a lot of the the tough work, the real dedicated research work on these properties. Got a transaction manager that handles that whole side of things. So I tried to create, team members that will handle all these aspects of the business, which will allow us to scale as high as possible.
Pete, somebody like, hey, this sounds really cool. I love land. I want to do that. I want to buy some land and see if I can flip it. Somebody that's new wants to get into this. Like, what's the first, maybe 2 or 3 action items that they should be taking in order to launch themselves the right way?
Mm-hmm. Yeah, I would first of all, I would research the business models that people are using in the land flipping business. There's a number of different models like we talked about. Like, some people do the desert squares where they're buying them ultra cheap and then selling them on terms. Some people are doing like what I do, which is buying like rural properties in, somewhat established areas and just flipping them quick. So I'd kind of research the models that you think would align best with your skill set. And then just learn as much as you can about evaluating these properties, because if you can evaluate the properties and really know what you're getting, that's half the battle. And then, we leverage broker partners, local broker partners, really heavily. And when we're buying properties, we ask them their opinions on the property, anything that we should watch out for, anything that's, about this area or property in particular that, maybe we should stay away from. So and then what we do is we give them the listing on the resale side. Yeah. So we try to make it a win-win. So
yeah, you're feeding them a little bit, and then,
that's right.
And then they're going to work for you on the front end.
Right.
Which makes a lot of sense. You're not going to have them. They're not going to keep working for you if you're never feeding them.
No. And we try, we pay 10% commission on the resale side. Like we try to really be good with our broker partners because they're an integral part of our business, really. When we find a good one, we just try to do more and more prospecting in that area because it's good for both of us. So
yeah, I mean, they're the local experts and they're the ones that are going to be able to sell that property for top dollar.
Right.
Not you. Right.
I
mean, especially if it's not.
I don't even see most of these properties in person, at least.
Yeah.
So
sure. That makes sense. What's a mistake that you've made in this business and throughout your career, whatever? Any mistake that you want to pick that you've made, and how have you learned from it? How can you pass down some knowledge to our listeners?
One of the big things that I've fallen prey to over the years, and I think I'm past that, is the shiny object syndrome. As I'm an entrepreneur, I think it's in my blood. I really feel like I've always wanted to be an entrepreneur, my own business owner. So I see things that people are doing, like, hey, that sounds great, or someone has an idea, or I have an idea and it comes to my head. And I'm like, that would be a great business to start, or side business, or whatever. And I've gone off on some of those tangents sometimes, but really the most success is obtained by taking one thing, focusing on it, and making it the best possible business that you can.
Couldn't agree more. I mean, look, if you want to flip land. But
That's
if you want to buy commercial properties, don't buy commercial properties, flip land, buy multifamily properties, buy single family homes, and, do everything else in between. Like, you got to put some focus into what you're doing. Otherwise you're just going to kind of be average or worse than average at everything you do. So yeah, 100%.
Yeah. As you were saying that, I just thought, like, last year at this time, I bought a motel. And then I was like, that was another thing that sidetracked me, but I needed some accelerated depreciation. So I bought it. But it's a project that hasn't really taken off like I wanted it to, because that's not my focus right now. My focus is,
you probably would have been better off taking your money and passively investing into something for the tax write-offs versus buying a motel. And maybe it'll end up working out well. Hopefully it does. I wish you the best on it. Hopefully it works out well, but it goes to your point where you got to just focus, and you've been focusing on this land flipping. You've had success with it, and that's great. And that the beautiful thing about real estate and business in general is you can make money so many different ways, but the most successful people at it are the ones that are focusing on that one thing that they do. They just do it really freaking well over and over and over again. And it's maybe not that exciting after you do it so many times, but that's what makes it so successful.
Yeah, I'm 100% on the same page with you on that. I mean, it's maybe it gets boring after a while if you're an entrepreneur and always looking for the new latest and greatest thing. But I think the way to kind of combat that is to, like, keep thinking about your business and how can I make it better? How can we scale? How can we improve? Think of it as a challenge in that way, instead of getting sidetracked in all these different things. So
yeah, how can we continue to integrate new things into it? How can we continue to scale and improve it? Right? Where can we bring more people into the business? Eventually, maybe you end up bringing in the brokerages, and who knows where it ends up going as you grow your business. But there's things you can do that you can add on to it, that you can take away from it. You can streamline it. If you're always thinking about the growth, I sat down with actually one of my investors, and that's what he was talking about. He's talking about just like every couple of weeks, you've got to stop. And you've got to take 2 hours, clear completely your calendar, clear your head, and go somewhere and just think. and think about your business and think about how you can improve it, how you can make it better, how you can make it more exciting, how you can make more money with it, how you can, help more people with it, and just clear your head and think about it. And I was like, oh, that's really cool. Coming from an investor, especially wow, that's awesome. I love it when people teach me things
Yeah.
like that.
Oh, I love learning. I'm constantly trying to learn, and so many people have so many good things to share, and it's just you got to be open to it.
What's the biggest risk right now with land flipping that you see either currently happening or that you see as a potential, kind of hazard or trap coming up with land flipping?
Well, I'm definitely very closely monitoring the market. Obviously, the market, we don't really know what's going to happen with it. I mean,
Yeah.
there's a lot of talk about things are really going to fall apart here, but I don't foresee any sort of crash like we had in 2007 to 2009-ish area, but I don't really know. There's a lot of smart people back then, really smart people that should have seen that coming that didn't. But I mean, I think that the thing is just really keeping a close eye on our days in inventory. Like like I said, our average hold time is 60 days. So if I see that really ticking up,
Yeah.
we're going to have to adjust our
Time to pull
purchase
back.
prices accordingly. So,
Yeah.
I know that the good properties will still sell, but we're probably going to have to buy them for cheaper.
Yeah.
So,
No, that's good. I know your metric, right? You are looking at days on market and knowing that metric. And once that starts ticking up, and I'm sure you're looking at sales prices too. But once that starts changing, then okay, I got to start buying for cheaper. I got to maybe potentially pull back on how many deals we buy in a particular area. And you've already mentioned the metric before about you're looking at, how many properties are selling in a particular, year. I'm sure you look at quarter and all that kind of stuff, but how many properties are selling versus how many properties are listed. And as you see more and more properties being listed and less properties selling, certainly that's a market you got to be very careful.
yeah, you got to be on top of it. You got to be on top of it. I have noticed a slight shift probably earlier in the year. Most of our deals, they seemed like the buyers were cash. And then it transitioned a little bit that a lot of these properties that we're selling now, they're cash, but they're being funded from HELOCs and things like that. So I don't know if there's any correlation to the market itself, but it just seems it's a little shakier when someone has cash as opposed to someone's buying with a HELOC. It just seems like we've got a lot more of those. Now, if people start having a problem getting those HELOCs,
Yeah.
then I could foresee some bigger problems for sure.
Yeah, that's it. That's interesting. That's really interesting because obviously when people were buying cash, interest rates were at record lows.
Right.
So why wouldn't you be buying with the HELOC or with financing? And now as interest rates have crept up and we're sitting here, I don't know what land. I mean, what's an interest rate for a piece of land? It's got to be in the sevens.
Yeah, I think a lot of the land specific lenders are probably 7 to 9. Like when I'm working with that partner to buy the notes, he's listing 9.9%.
Wow.
So.
Yeah. So it's interesting. They're buying on debt now at super high interest rates. Yet when interest rates were low, they're buying with cash. Definitely something to monitor.
Maybe they were buying with stock proceeds or crypto or something like that.
Yeah. Yeah.
I don't really know where that cash came from, but
right. You don't know the backstory there, but it's something definitely to be looking at. And I guess the lesson for the listeners is no matter what you're doing, you've got to look for the things that are going to affect your market, and you've got to look for the trends in the data in order to make decisions on how to move forward as best you can. You can never predict it. Like you said, you just don't know. You don't know what's going to happen. I mean, a lot of people say we're heading into a recession, but a lot of people have said that for the last 10 years too.
Yeah. It's funny. The thing I think about often is that in 2007 to 2009, when I was selling those bank owned properties, it's not like there was no market activity. It's just that it shifted. Like there was a complete reset on the prices. I mean, I would list some of these bank-owned homes at the time in the worst real estate market ever, and I'd get 30 offers, 30 cash offers.
Yeah.
So things are selling, it was just the reset on the prices.
I was buying those properties, and we stopped touring the houses because you had to be so fast on writing the offers. So you just didn't go into the houses. You'd write,
No.
we'd just write 30, 40 offers a day. And if we got some properties, we'd quick go see them just in case there was something we didn't like, something that we had to, it was just a non-negotiable. You had to walk away. Otherwise we'd go forward with it. And
Right.
that's just how it was, because they were so competitive. You had to get your offer in the very first day. And there was so many of them that you couldn't go tour them all. Otherwise it would be 3 or 4 days later. By that time, the property was gone.
Yeah. Yeah. The craziness really at the time. I mean, I would get, there was days, and I was kind of a one-man team at the time. There was days when I'd have 30 to 50 voicemails, and I just couldn't keep up.
Couldn't go. Absolutely.
Yeah.
Wild. All right. Well, Pete, I got a couple last questions I want to ask you before we wrap up. One of them is, what's a favorite book you can pass on to our listeners?
Favorite book. Okay, that's a good one. I'd love to say Rich Dad Poor Dad, because I'm sure a lot of your guests have probably said that one, being in real estate investors. My favorite book really right now that I've gotten a lot of insight from is kind of a marketing related book. It's called $100 Million Offers. It's by someone named Alex Hormozy, but it's just really a kind of a groundbreaking book. If you're into marketing and business and everything, there's just so many good insights in there. So
cool.
It's an interesting one you may not have heard of.
Yeah, love it. How do you like to give back?
How do I like to give back? Well, first of all, I'm kind of my view on life is that work really hard to just try to be a good person. So my interactions every day with everyone I meet, I don't want to ever come off as a negative interaction. So I try to be friendly and polite and happy and everything to everyone I meet. And I've got a family, and we all try to live that way. And we donate wherever we can and try to help in whatever way we can in a lot of different things. So
love it.
Just trying to be a good person, I think, and that'll come around.
Yeah, for sure. For sure. Last question. What are your 3 pillars of wealth creation?
Yeah. Well, I think first of all, you have to have a money generating engine of some sort, whether that's your W-2 job, whether it's a land flipping business, or whether it's, your rental properties of some sort that are bringing you some sort of income that you can actually live off of. Then anything extra that you're not, investing into that first thing, you can take and then, put it into your wealth creation vehicle, whether that's, apartment investing, or it's, building your stock portfolio in some way. And then I think the third pillar is just continually educating yourself, investing into your own education, because that's kind of really some of the highest leverage stuff that you can do. If you can build your knowledge and your awareness of the world and just how you operate within it by educating yourself and becoming as I don't know, as resourceful as possible, I think that's kind of the ultimate wealth in a way.
What's one success habit that's really helped propel you, in 2022?
I'm a very regimented person, and I guess you could say from a basic level, just as far as routines go, I wake up at 4:50 every morning and go to the gym 5 days a week right then. But as business wise, it's about the lead generation, keeping that consistently at a high level, setting a number and always meeting it. We send out direct mail for our lead generation. So at this point, my goal is 50,000 letters a month, and I always make sure to hit that.
Yeah. I mean, your business is the amount of leads that you get.
Yep.
Or that
numbers game.
It's a numbers game, right? You're going to get deals if you put the numbers out. What's your go-to workout?
I do kind of CrossFit style workouts.
Love it.
So yeah, I've been doing that since like 2014. And the gym I go to now is not a CrossFit gym, but it's like functional fitness, I guess
Sure.
is the right term for it now. So it just keeps it fun. And my
Yeah.
20-year-old daughter, she was 14 at the time, but she was 12 at the time when we started together. So she's been on this whole kind of journey with me. So it's been great. So every morning we get up early together, we go to the gym. It's just kind of our thing that we do. So
Oh, that's really cool. That's really cool.
yeah.
So you got her involved in the business when she was 12.
Yeah, in the working out business.
Oh,
So,
in the workout
yeah,
business?
yeah, in working out, yeah. But my kids they have actually flipped land themselves as well.
Cool.
So yeah, so I've thrown them a couple of the deals that were kind of smaller ones that I wasn't I was still going to move forward with them if they didn't, but they started out with, I've got two older daughters, and they started out at with $8,000 that they invested their own money, 4,000 each, and they pulled it together, and they've parlayed it into 65,000 in a matter of just a little over a year. And then they've got another property which they just bought for 20,000, and now they're under contract to sell it for 50,000. So it's going to be even higher than that.
Love it.
So
Love it. That's awesome. Love passing that down to the generations below. So that's really
yes.
cool. I'm hoping somehow my kids get involved in business. They're still young. They got 13 and 9-year-old, but want them to somehow get involved. We'll see what happens. Well, cool. Pete, really appreciate it. Thanks a lot for the insight and the value you've added to my listeners. Really appreciate that. How can the listeners reach out, learn more about what you got going on?
Sure. The best place would be to go to turningprofit.com. And that's my website. And each month on there, I do a monthly income report, which breaks down my business, how much revenue we made, how much gross profit we made. Each deal that we did, I break down each one and how did it go? Did we do well on it? Did we, not do so well on it? I mean, to this point, knock on wood, I haven't lost money on one deal, but some deals are way better than other deals. So I do that monthly.
That's
I've
really
also
cool.
I've also got on there a full breakdown of the 51st deals that we did in the land flipping business. So I think that's pretty interesting. So you'll see the purchase prices, you'll see what we sold them for, and basically how all those deals went.
What? How many deals are you doing a month, a year? What is there?
I'm shooting for 10. Like this
10
is our first
a month or 10 a year?
10 a month. Yeah, 10 full resales a month. Yep. So this year, we're going to be short of that. I think we're going to be probably at around 70 so far this year. But my goal is to hit 10 for next year. We've done probably we're going to probably end up this year at about 3.7 million in revenue, something like that, at about a 50% gross profit margin. So on average, we're kind of doubling our investment. Next year, I'm trying to hit 10 million. I think it's definitely doable. So
that's cool. Awesome. All right. Well, again, really appreciate it. Appreciate the time. Listeners, reach out to Pete. Learn what he's got going on. Turningprofit.com. We'll put that in the show notes. Pete, you have a fantastic rest of the day.
You too, Todd. Really appreciate it.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.